Hello, everybody. So yesterday I did something that I thought I would almost never do. I bought a security that pays a dividend. Me, the growth investor who wants growth before everything, I bought a security that pays a dividend. I bought the MSTR preferred. Of course, I didn't pay it for the dividend. I'll walk you through my logic. But why would I do that? Why would I invest in one of the MSTR preferreds? And which one did I buy? So, importantly, I bought Strike. I bought the Strike MSTR preferred yesterday. I was waiting for a bounce in MSTR price to get into the preferred, and I felt like yesterday was the right time to do that. What prompted this buy? What prompted this buy was yesterday's Fed speech. The rate cutting cycle seems like it is about to begin, and therefore I find Strike very compelling at this point. Strike pays an 8.2% dividend, and it sells below par. Par is 100. Strike sells from 94.97. So right there implied you already have a $3 gain implied, right? And then you have an 8.2% yield. And so why would I be focusing on the yield? Why would I be interested in kind of this hybrid security, of course, but still mostly seen by the market as a debt instrument? Well, it is because guess what happens when the Fed cuts rates? Instruments that pay yield, that pay dividend, get re-rated. There's a few things that I want to say. It's a less volatile asset than MSTR, and I know some people might care about that. For me, that's not a leading reason as to why I bought Stretch. I walk you through my Strike. I'll walk you through my rationale as to why I bought Strike. Before I walk you through my rationale, I also want to point out that even though, of course, the market thinks all of the strategy preferred are junk, quote unquote, they are not junk, because if you look at the rating, the BTC rating, essentially how much cash in the form of Bitcoin there's on the balance sheet to back the asset, to back the money borrowed, that's 5.5 times. These preferred securities are not backed by future cash flows. They're backed by Bitcoin that is sitting in a private wallet. So let's look a little bit at Strike and why I think this setup is very interesting right now. So first of all, like I said, the volatility. You can see if you go back a year, well, 6 months really. I mean, the chart doesn't go to a year, but if you go back a few months, you can see Strike has been roughly trading at about $100 plus or minus $20. So the volatility is pretty low, if you ask me. On the other hand, MSTR, as my comment section reminds me every day, MSTR has been much more volatile, and I would argue that it'd be fair to say that MSTR is traded at about $350 a share, plus or minus 100, depending on the Fed speech of the day, depending on the mood of the market. And so point number one is the volatility. The volatility argument may be favored by a lot of other investors who want to kind of have a cozy portfolio and want to be at the beach. To me, I'm immune to volatility. Volatility doesn't faze me. I really don't care about volatility. I'm very much used to that. Plus, I have a lot of assets that are not really that. Well, some of them are, but not all of them are so correlated. So, Tesla will be up, HIMS will be up, and MSTR will be down. And sometimes HIMS will be up big, and then Tesla won't be doing much. Anyways, that's kind of the way I view a portfolio. No, that's not the reason why I like STRK. The volatility is not the reason. Why do I like STRK? Because I think STRK is a dual bet. It is a two-part bet. It is a bet on the re-rating of the value of Strike. How much is Strike going to be worth when the rates are zero? It's going to be worth much more than that. And it is also a bet on the long-term success of MSTR. Why is that? Why is it a bet on the long-term success of MSTR? Because once MSTR trades above $1,000 a share, then Strike will be convertible to one-tenth of a strategy share. So at some point, there's going to be a re-rating in strike, and it's going to be very, very interesting to see. And of course, imagine strategy, say we're in the 2030s, and strategy is many, many thousands of dollars a shares. If we're in the 2030s and start, I don't know, 2030s and say strategy is like $10,000 a share, then I would expect strike to either be converted. That's one possibility, but another one is for it to trade very, and by converted I mean I would sell it and I would just get the shares. But I could also expect it to trade like 90%, like 90% of a move in strike at that point could be explained by MSTR stock price movements. So essentially, you're giving up everything below 1,000, but above $1,000 a share, you're participating in that upside. So it's a dual bet, and let's walk through that bet. So the first thing, short-term to medium bet. So if rates go to zero or near zero, do we still expect that strike will have an 8.2% yield? And the answer to that is no. When rates get to zero, perhaps in 2028, or near zero, right? If it's 0.75, I'll count it as close to a zero. Anyways, if rates get this low, then the yield of strike will likely re-rate, maybe 4 to 5%. If rates come down close to zero. And so if the strike yield is 4 to 5%, what does that mean? That means the stock price went up. And if the stock price went up, that means to get that yield on strike, you probably need a stock price on strike to be between 150 and 200. So betting on strike in the short to medium term is a little bit like buying TLT and hoping for a rate cut cycle while buying TLT and holding TLT. It's a little bit like that in the short to medium term, but the magic is that this also includes the MSTR upside for the long term. You retain MSTR upside for the long term, but you get access to an entirely different type of return in the short term. You get access to a macro-driven return, a bet on the rate cuts. Now, to get access to this, what are you giving up? What are you giving up, especially compared to, say, buying MSTR, right? Capital is fungible. If you put capital into strike, you can't put it into MSTR. So what are you giving up? Well, with strike, you're essentially giving up the returns between $358, where it's trading right now, and $1,000. That's the returns you're giving up. So you're giving up a 2.79x, essentially. Okay, but any returns above $1,000, once a strategy crosses $1,000, strike becomes convertible 10 to 1. And so that means that after we've crossed $1,000, you will see any return above 1,000 in the common accrete to STRK. In addition to the value of those yields, right? And the present value of those yields and the value of that coupon. So that's on top. That's going to be on top. So you're giving up a small upside, and the upside that you're giving up by buying strike is a 2.79x. You're giving up that upside, and in exchange for giving up that upside, which if you are a mega bull in MSTR, if you're a mega bull of MSTR, right? MSTR is $100 billion right now. If you're a mega bull, you're gonna think MSTR at some point is gonna be 5 trillion, right? If MSTR is 5 trillion at some point, and you really believe that, you're looking at a 50x from today, right? Roughly. And of course, there will be dilution along the way. We'll see how the ATM works, but we should see less ATM. So more and more the rise in market cap of MSTR should equal the rise of the stock price. But let's assume you still have some dilution. So let's assume you have a 50x in market cap, a 40x in stock price. You're giving up 2.79x when there's a 40x in stock price. Now, granted, these are earlier gains that you're giving up, but... And so they are more powerful, of course. But it's not that big of a deal to give up 2.79x. Why? Because in exchange for that early yet small part of the upside relative to where MSTR is headed, in exchange for that, you are accessing a roughly, I would argue, a 2x macro play, which is strike moving from 97 to somewhere between 150 and 200. So you're giving up 2.79 and you're getting a 2x. So you're giving up perhaps 0.79x is what you're giving up. You're not giving up very, very much, but you're getting a part of your return that has nothing to do with Bitcoin, but it's uncorrelated to Bitcoin, uncorrelated to MSTR. You're getting a part of return that is a bet on the rate cut play and on the rate cut cycle, and you're also getting downside protection. And of course, I know when you calculate risk-adjusted return, downside protection is important. I'm very confident in MSTR. Come on, I'm fine with it, but it's a icing on the cake to have downside protection on this one. So all in all, this trade to me is looking very, very much very good. But this is not it. This is not where the math part begins of this analysis, and this is what makes me think a lot about this investment. Now, to be fair, I played it with cash. I bought it with cash. And so I started a position with cash. But this is the first time on the channel where I'll tell you that I'm a little bit margin curious on this one. And of course, I'm the first one to always tell you the rules of margin. Be extremely careful. Drawdowns can hurt you, although this one is less volatile, right? Doing margin on less volatile asset is pretty good, right? You're not as mark to market. But anyways, I'm margin curious. This is no financial advice. Be very careful with this. But this is food for thought. So let me give you this food for thought. So strike right now, of course, is 75% margin requirement. So not great. But the strike issue, the preferred, is less than 1 year, right? It's less than 1 year old. Eventually, and this is a pattern I've noticed, once issues become a year old, eventually you will see them come down. And I expect that strike at some point will have a 25% margin ratio, just like MSTR does, which means it will be deemed a blue chip. It will be deemed safest, and that's part of the bet, right? That's why you're taking risk, right? This is not a money market account. You're taking risk. So that's point number one. What's going to be the margin maintenance requirement in a few years? In 1 year, not even 1 year, I think. And I think it's going to be close to 25%. I think it's going to come down. So point number one. Then point number two, very important. Strike pays 8.2%. If you buy it today, right? So 8.2% is your effective yield in perpetuity. It's a perpetual preferred. So that's your yield. And this is what brokers charge today. Today, brokers charge less than 8.2%. That's really the magic, right? M1 charges 5.25%. And you can negotiate, and you can use the chat box and be like, hey, I don't like you raise my... Anyways, I'm giving you a tip here, but anyways, if you don't want to go through the process of chatting with someone in the chat box, you just pay the 6.4%. So you can see 6.4%. 6.4% is not that high. It's lower than 8.2. This is Interactive Broker. Interactive Broker is at 5.8%. This is Webull. Webull is at 5.9%. So you can see these rates are pretty much in the 5 to 6-ish. Let's call it 5.8 on average, or 5.9 on average. So 5.9 is what you're paying on average, and Strike pays you a quarterly dividend of 8.2. So if I know how to count, the Strike dividend pays for your margin, and there's even a little profit. And this is the best part of this video. What do you think happens to margin rates on September 19? So he's going to cut rate. Powell's going to cut rate on September 18. What do you think happens to margin rates on September 19? They will drop instantly. Margin borrowing rates follow the Fed funds rate to a T. So you may remember 2020 and 2021 when these rates were 1.75%, then 2%, and then it started rate 2.25. You may remember these rates. So these rates eventually, in 2.5 years, should go back to about 2%. And so think about the golden situation you would be in 2.5 years, because these rates would have gone back to 2%, yet Strike would pay 8.2%. So this time you're doing more than arbitrage. And the value of Strike would probably be between 150 and 200, because Strike by then would be yielding something like a 5% or 4%. And you still get MSTR upside past 1,000, which if you are bullish on MSTR, you believe this stock will be multi-trillion dollars at some point. So you're getting most of the upside. And you're not even getting the possibility of credit ratings. I mean, I'm not even discussing, I didn't discuss this, but you also have the possibility of eventually, maybe in 28 or in 29, getting a credit rating. And if we got a credit rating on, say, the MSTR preferred, like what if you get a credit rating on Strike? Maybe Strike would go past 200 with a credit rating and a zero interest rate environment. So I find this trade very, very compelling. I will go say something crazy now. I find it almost as compelling as the MSTR common, and that's kind of my take. So, anyways, this was not investment advice, not financial advice, not margin advice, not Bitcoin advice, no advice whatsoever. This is definitely just entertainment and food for thoughts. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.